Hello again, everyone. This is Matt Fraley with Breakpoint Trades. So I'm doing a follow-up video on these Renko style charts for ES. I already recorded, as you know, a detailed video about them, what the Renko bars are, how to install them in TradeStation. I went over a lot of things. However, some of what I was stating could have been lost in transition, particularly the setups. So what I wanted to show you is, again, you're going to see a lot of variation. You're going to see a lot of movements in these charts. And I think the best thing to do is really just try to focus on the best setups. I also suggest that you try to find your own. But what I tend to look at, and again, I don't care if it doesn't produce me many trades, that's fine. I want them to be high probability trades. I look at the moving average configurations here. One of my favorite setups is, for a long, the moving averages are bearishly stacked. You can see them here. Again, this is your 9 EMA, that's your 20, that's your 34, and 50. You can see also I have them on the price. So you can see you get your first bounce attempt, pull back, and then price bounces again, and then your 9 EMA crosses over it. The moving averages all pinched together. These various indicators here, the MACDs, the BR squeeze, the MACD, BB, all go positive. See that? Of course, your moving averages go what we call bearishly stacked or bearishly configured. And it's when they do this, they come from when they were bearishly stacked, when they first turn positive. If you get some price separation here, I'm not just talking where it just goes up a little bit and then reverses, but I'm talking about enough movement here. I've never tried to quantify it here, but you get enough price moving up where, again, you get some good separation on the 9 EMA. Moving averages expand out a bit. Most of the time, you'll get a good buying opportunity on that first dip right here when they first then come back together and then pinch. So it's basically like your trend reversed, you get your first move up, and then you buy that first dip. That's kind of how I like to do it. Now in this one, you see you got your first Renko reversal bar here. Sometimes these will work. That's probably one I would not have chased because I like the 9 EMA to be a little closer to here, pinched a little more. So you can see you got your little bounce here, and then price came down again. Now it was down here. The 9 EMA was pinched up here with the 20, and this was a good area to look to buy a reversal. And you got your reversal bar up here, which you took a long. Again, this would have been a very nice long trade. You could see when this happened, this indicator here basically tagged the zero area where it became support. The MACD was over zero, and the MACD BB was over zero. So really good confirmation. Again, it's that first area where the moving average configuration first goes from a bearish stacking to a bullish stacking. I look to buy that first dip, and I buy the first dip into the moving averages and a reversal bar. So that's one of my favorite setups, and that probably makes sense to you as well. Okay. The opposite, of course, is true for shorts, which I'll show you in a minute. This is one, these you got to be a little careful of. It's the second pullback. Again, a lot of times these will work, but sometimes these won't. You had a big price expansion here. Moving averages got pretty wide here. And you got to pull back. The 9 EMA tagged this. You had a reversal, but you wouldn't have got much of a trade on this. You'd have only made 1, 2, 3, 4, 5 ticks, and that's if you got out. So if you didn't get out, you probably became a losing trade here. After a big expansion like that, I'll usually want to see the moving averages. I usually want to see a couple oscillations where they pinch a little more. Okay, kind of like you'll see sometimes an ABC type pullback. This was actually a little mini ABC. Anyway, so moving on. So you can sort of see like an example here. Moving averages were slightly bearishly stacked there, but really that was more of a whipsaw. This is your 200-day moving average. So price came down and held that. You can see moving average slope turned positive. You get a little pullback here. 9 EMA is still a little separated. You get a bounce, pullback. So that's sort of like an ABC. That was a decent bounce trade again for a trade. So here's a great example of the short. So your moving averages were bullishly stacked up here. Oh, before we get to the short, again, here's a great example of like just some stuff I like to filter out. this had a nice move up here, but it was too much. Whenever you get too big of a price run like this and the stuff just gets too separated, I won't usually buy this because, yeah, the 90 MA is pinching with here, but a lot of times, again, as I stated, I want to see some sort of maybe ABC. I want to see these pinch together more. So if you ignored that first reversal there, you never did get a reversal here for a buy. Anyway, moving averages went bearishly stacked, as you see. Again, when I stated that when the moving averages first turn over, it typically you get a really good signal right away. Like here they go bearishly stacked. Price bounces up into the moving averages. They pinch together. So that was a great short. Again, it's that first time when they first reverse from a bullish to a bearish. It gives you a great short. You see your moving average. You see your indicators stopping at zero. Or again, like I said, for long when they're bearishly stacked and they turn bullish, it's that first pullback. That's my favorite trade. Is basically the first pullback, guys. Okay. That may mean that you're waiting for a lot of these. You only get a handful of them a day, but they're very strong trades. Like here's an example. You really don't get one here very well. They're bearishly stacked. It goes bullish, but you don't really get that pullback. I guess you do on this one. It just doesn't occur very soon. You get a nice move up. You get your pullback, and the 90 MA pinches here. Now, the reason why this one works pretty well versus some of those others I showed you where you had your big expansion is because, again, this is the first pullback after the trend change. It's the subsequent pullbacks that are a little trickier. You know what I mean? Anyway, here's a great example of a bearish short. They're bullishly stacked. They go bearish, so you look for your first price reversal up. Bounce to short, which is right here. Great short. Look, all your indicators confirm. Again, as I stated, knowing where to take your profits is tough. You could wait for a reversal, or you could do some sort of target or a combination. Usually on these trades, you at least get a good 10 ticks, so you can at least use that as a target. Again, some of these trades produce a lot more of that. That's where some of the art comes in, obviously. So again, that's typically what I'd like to do. I like to see, they change from one bullish stacking to a bearish stack. They basically the moving average configuration flips, and you look to buy that first dip. Those usually provide you great trades. Like here's an example of two of them. Pullback, the moving averages flipped configurations here. You buy the first dip, moving averages pinch. That was an awesome trade. Moving average are bullish, they go bearish, and then you short that first rally. So that's actually two great ones, an example, or great example there. So that's really, to me, that's some of the best setups. These other setups like this can provide you trades, but they're kind of can be hit or miss. And again, the other thing I like to do, guys, just again, that's why I like to look at strong trends, buy the first dips, or short the first rallies. You also want to see how price is trading. If you see that it's trading sideways like this is just chop. So you just kind of you learn to ignore this. Yeah, this reversal here could have worked, some of these, but you can see it's just going choppy sideways. So best to ignore some of that. Trying to see some other examples. You can also draw patterns on these Renko type charts. This is a nice buy signal here. Moving average is bearish. They go bullish. You buy the first dip. Again, right here, this is just a bunch of chop you ignore. Okay. This one you may or may not have tried to do. Again, you didn't really get much of an expansion here, so if you bought this one, you only have 1, 2, 3, 4, 5, 6. You did get 7 ticks, but again, try to also, like I said, it's where some of the art comes in. Look how price action's trading. If it's been going sideways, it's due for a lot of chop. Okay, just kind of common sense stuff. It's after price is then kind of moved up or is moving down strongly in a sloping fashion is when you get your better trades. Okay, so that should just be common sense for you. Again, stuff like this, just chop, all in here, just chop. you learn to ignore. Again, it's just more where price is moving strongly up or down is when you get your better trades. This is a nice move down, nice move up. Price moving averages flip positive. You buy the first dip reversal right here for a nice trade. So hopefully you're starting to see kind of what I'm looking for. Here's a short. Again, you have a nice sort of trending moves here, not all that chop. Price goes negative. You short the first rally here. Boom. You know, right here, just a bunch of chop noise to ignore. You can see it all in the moving average configurations. They're just kind of up, down, up, down, up, down. So that's where you learn over time to filter that out. That's why I stated if you trade this stuff, do so on sim for quite a long time until you're consistent with it and you have your emotions down and your order entry down. These things can move fast. You need to have your orders in. Things you can look at more advanced in the future are like divergences or reverse divergence. I've talked about that before. So reverse divergence is when, say, price is trending up and your indicator is not confirming. So I'm not talking about normal divergence where you're looking at the highs of indicators. I'm talking about when you're looking at the low of indicators. So for example, here you can see price pulled back here. If I draw some trend lines here, there's a low here. Price pulls back here and here, especially. Notice how much lower this MACD or this MACD BB is from this one. That's what you call reverse divergence. It's actually a positive divergence. Okay. Again, we're making this is a higher high, a higher low from this. You see that? And let's draw a trend line from, from here to here. So you can see there's a divergence. This is making a lower, this is a lower low, this is a higher low. That's a divergence. So that's a bullish thing, and you can see your moving average is still bullishly stacked. You have sort of an ABC type correction here, ABC. Again, moving average is still bullishly stacked. They're pinching, so that was a good long trade there. So that's some things to look at. You want to get more advanced. That works on shorts too, and downtrends. Anyway, that'll do it, guys. So hopefully that gives you an idea better what I look at, and hopefully gives you an idea of when to kind of ignore things. Like this is just a bunch of noise, chop, typically. So again, I like to see price trending strongly in one direction, then reverse, and I'll buy that first pullback or short that first rally. Okay, talk to you later. Thanks. Hope this helps.